Welcome to the deep dive.
Great to be here.
Today, we're digging into Bank of America, specifically their first quarter 2025 results.
Yeah, we've got a good set of materials, the press release, the slides.
Right, and that BNN Bloomberg clip, too, with the analyst takes.
Exactly.
So the plan is, as always, to boil it all down, pull out the key stuff, so you, our listeners, get the picture without wading through, all the documents yourself.
We'll navigate the numbers, find the important trends, basically figure out how BofA kicked off 2025.
Okay, let's dive in. Those headline numbers. Net income.
$7.4 billion.
And that's up from last year.
Yep, up from $6.7 billion in Q1 2024.
Okay. And revenue.
Also up.
Yeah.
Reached $27.4 billion net of interest expense. That compares to $25.8 billion last year.
So what's pushing that revenue higher?
Well, a few things. Higher net interest income was a big part.
Yeah.
Also, service charges and card income contributed.
Right. Net interest income, the NII, always key for banks.
Definitely. It reflects that difference between loan earnings and deposit payouts.
Mm-hmm.
Still seems favorable for them.
Gotcha. And earnings per share.
Diluted EPS climbed to 20 cents. That was down 176 cents same time last year.
Okay. And pre-tax.
Pre-tax income was $8.1 billion, up from $7.3 billion. And they also flagged this non-GAAP metric.
Pre-provision one.
Exactly. Pre-tax, pre-provision income. It basically strips out the loan loss provisions, gives a cleaner view of core earnings power.
And that was?
$9.6 billion,
Mm-hmm.
up from $8.6 billion. So solid growth in underlying profitability.
Okay, let's drill down on that net interest income figure. You said it was higher, but how much?
It landed at $14.4 billion, so slightly up from $14.0 billion year over year. On an FTE basis, fully taxable equivalent, it's $14.6 billion.
And deposits. Always crucial. How are they looking?
Pretty strong, actually. Average deposits hit $1.96 trillion.
Wow.
Yeah, that's a 3% increase year over year. And ending deposits right at the end of March were about $2 trillion.
So they're holding on to, and even growing, customer funds.
Seems like it, which, fuels the lending side.
Speaking of which, loans and leases. Growth there, too.
Absolutely. Average loans and leases, $1.09 trillion total. That's up 4% from Q1 24.
Any particular areas standing out?
Definitely. Global markets had record average loan balances, $160 billion.
Record.
Yeah, up 19% year over year. And get this, it's the 18th straight quarter of growth there.
18 quarters. Wow. What else?
Middle market average loans grew a healthy 6%. And small business loans saw an 8% jump year over year.
So lending seems pretty broad-based.
It does, across several key segments.
Okay, more lending usually makes you look closer at credit quality. Any signs of stress?
Well, based on the report, things look pretty stable. Net charge-offs were $1.5 billion.
And how does that compare?
It's basically flat. Flat versus Q4 24 and flat versus Q1 24. So no major deterioration showing up there yet.
That's good news.
Yeah, it suggests asset quality is holding steady. And they've got their allowance for credit losses sitting at $14.4 billion. That's the cushion.
Right, the buffer. Okay, how about the cost side? Expense management.
Expenses, non-interest expense did creep up, 3% increase, hitting $17.8 billion.
Any color on why? Investments, people.
The release doesn't break it down in huge detail, but yeah, you'd speculate it's things like tech investment, maybe higher staffing costs, compliance, the usual suspects.
Something to watch going forward, then.
For sure. See if that trend continues.
All right, capital. Always important for banks.
Yeah.
And shareholder returns.
Capital looks solid. CET1 capital, that core measure of strength, was $201 billion, pretty much level with the prior quarter.
And the ratio?
The CET1 ratio stood at 11.8%.
Mm-hmm.
That's, more than 100 basis points above the minimum they need to hold.
So a good buffer there.
A very comfortable buffer. And they were active returning capital, too. Paid out $2 billion in common dividends.
And buybacks.
Yep. Repurchased $4.5 billion of common stock. So significant returns to shareholders.
Okay, let's shift gears a bit. Digital. It's everywhere in banking now. How's Buffet doing?
Oh, the digital numbers are, frankly, quite impressive. They logged 4 billion digital logins in the quarter.
Billion. With a B.
With a B. That's up 17% year over year. Huge engagement.
What about actual sales happening digitally?
Hit a new record. 65% of total sales were digitally enabled.
65%. Wow.
Yeah, it shows how central those online and mobile channels have become. Mobile users are up to 40.5 million now.
And Zelle? The payment network?
Still growing strong.
Yeah.
Active Zelle users hit 23.9 million, up 9%, and both the number of payments and the dollar value sent saw significant growth as well.
So the digital transformation is clearly well underway.
Absolutely. It's a major theme.
Now let's bring in that BNN Bloomberg perspective. You said analysts were weighing in.
Yeah, the clip mentioned that analysts saw Bank of America and Citigroup, too, actually, beating the Q1 estimates.
So better than expected.
That was the take. And interestingly, despite, all the talk about tariffs and trade uncertainty,
Yeah.
the analyst quoted was still pretty positive on the banking sector overall.
So the underlying performance is maybe outweighing those macro concerns for now.
That seems to be the sentiment reflected there. The core results, the digital growth that suggests resilience.
Okay, so a strong start overall. Let's peel back the onion a bit. Look at the individual business segments. Consumer banking first.
Right. Consumer banking pulled in $2.5 billion in net income. Revenue was $10.5 billion, up 3% year over year.
Driven by the same things, NII, fees?
Yeah, pretty much. Higher NII, service charges, card income. Now, average deposits in consumer were actually down slightly, about 1% to $948 billion.
Oh, interesting. Slight dip there. Loans.
Average loans and leases were up slightly, 1% to $315 billion. But look at consumer investment assets.
Yeah.
$498 billion. That's up 9%. Big jump.
So maybe some shift from deposits into investments?
Could be part of the story. They also kept adding customers. Net new checking accounts, about 250,000.
And they highlighted that streak.
They did. 25 consecutive quarters of net growth there, plus about 1 million new credit card accounts.
And spend it.
Consumer payment spend, $1.1 trillion, up 4% year over year. So consumers are still spending.
Okay, busy quarter for consumer. How about global wealth and investment management? GWIB.
GWIM also had a good quarter. Net income of $1.0 billion. Revenue hit $6.0 billion. That's up 8%.
What drove that revenue growth?
Mostly higher asset management fees. Makes sense given market movements. Client balances overall reached $4.2 trillion.
Trillion.
Up 5%. And AUM, assets under management, were $1.9 trillion, up 7%.
Are they bringing in new clients too?
Yep, added around 7,200 net new relationships. That's across Merrill and the private bank.
And digital's big here too.
Very much so.
Yep.
87% of Merrill and private bank clients are digitally active. Even in wealth, digital is key.
Okay, next up, global banking. How did they fare?
Global banking, net income was $1.9 billion. Revenue came in at $6.0 billion, which was basically flat compared to last year.
Flat, so some puts and takes there.
Exactly. Seems like gains in areas like leveraged finance and treasury services offset lower net interest income within that specific segment.
But deposits were up here.
Significantly, yeah. Average deposits grew 9% to $575 billion.
Right.
And those middle market loans we mentioned earlier up 6%.
Right.
Treasury service charges also showed good strength, up 14%. And digital adoption is high here too, 86% among relationship clients.
Any word on investment banking fees specifically?
Yeah, the overall corporate investment banking fees, excluding self-led deals, were $1.5 billion. That was actually down 3%.
Okay, so a bit more of a mixed picture in global banking.
A bit mixed, yeah. Some strong points, some areas facing headwinds.
Got it. Last big segment, global markets. Sounded like a standout earlier.
It really was. Net income, also $1.9 billion here, but revenue jumped 12% to $6.6 billion.
12%, driven by trading.
Primarily, yes.
Yeah.
Sales and trading revenue overall was up 11% to $5.7 billion. And they specifically called out record revenue in equities trading.
Equities had a good run.
Seems like they capitalized on it. Their average VAR, value at risk, was $91 million.
And they mentioned a streak here too.
They did. 12th straight quarter of year-over-year growth in sales and trading revenue. Highest in over a decade, they said.
Okay, so global markets clearly benefiting from active markets.
Looks that way. Very strong performance.
And just quickly, that all other category?
Reported a tiny net loss, $4 million.
Yeah.
But that's better than last year.
Why the improvement?
Mainly because there wasn't that FDIC special assessment charge this quarter, which hit them in the comparison period.
Ah, okay. Makes sense. So stepping back, looking at the whole bank, the balance sheet, what's the summary on financial health risk management?
The message they're pushing is strength and stability. You've got the nearly $2 trillion in deposits as a strong foundation.
Right.
They also emphasize the loan book is, let's say, better balanced now, less risky than maybe in past cycles, lower concentration in unsecured consumer, home equity, that sort of thing.
And capital, liquidity.
Both significantly higher than pre-2009 levels. Plus, their own stress tests suggest they'd handle a severe downturn with much lower credit losses than historically.
And that CET1 ratio backs that up.
Right, that 11.8% provides a lot of confidence. It's a picture of, resilience.
The CEO, Brian Moynihan, usually offers some forward-looking comments. What did he say?
He called Q1 good, pointed to the EPS growth, highlighted both the NII and fee income growth, plus that strong trading result.
Did he comment on the economy? Customers?
Yeah, he noted consumers seem resilient and business clients are performing well. He did acknowledge, potential economic changes ahead,
That expressed confidence?
confidence in their approach, their disciplined investments, and focus on responsible growth, as they call it.
Okay, so let's wrap this up for our listeners. Summing up Bank of America's Q1 2025.
It really looks like a picture of solid growth. Pretty resilient across the board,
Yeah, and digital seems to be a huge part of that story. Strong engagement, lots of digital sales.
definitely. That, plus the focus on their responsible growth mantra, seems to be working, even with potential economic clouds gathering.
And beating the analyst estimates, like BNN Bloomberg reported, that certainly helps the narrative.
No doubt, it reinforces that positive momentum, good core profitability, stable credit, strong capital.
So here's a final thought to leave you with. We've seen this massive digital adoption across Bofera. The CEO acknowledges the economy might be shifting.
Right.
So the question is, how can Bank of America leverage those tech investments even more? Not just to keep the current growth going, but to really get ahead of whatever changes are coming for consumers and businesses.
Yeah, how do technology and those economic shifts interact? That feels like a key thing to watch for them going forward. Their success might really hinge on navigating that effectively.